Well, we have been highlighting trends as far as the power space is concerned, about how exactly power demand has remained quite resilient. We've also told you about how power companies, especially power stocks, have seen a complete re-rating, especially in the past 6 months. In fact, the month of June was one of the best months as far as the power sector is concerned. Now, along with that, you're actually also seeing most of the companies announce aggressive capacity addition plans. You're also seeing companies reduce net debt quite significantly. And what has been quite exciting has been the fact that companies have in fact said that they are looking at significant addition of capacity, but mainly via the renewable energy route. Also remember, the sector is in focus, as in the Reliance AGM, Mukesh Ambani also indicated about how exactly Reliance also is going to become and is looking to become a very significant and large player as far as the renewable energy space is concerned. In the context of that, JSW Energy announced its Q4 and FY21 results. When you're talking about the results for the quarter gone by, revenues and the consolidated revenues went down 12% on a year-on-year basis, coming in close to 1,570 crore. When you're talking about the core EBITDA coming in at 677 crore, margins coming in at close to 43%, a good jump up as seen as far as margins are concerned. When you're talking about the core profitability, coming in quite flat, coming in at a little over 107 crore. When you're talking about some of the key highlights, now remember that one of the worries has been the company's inability to tie up long-term PPAs, but the company seems to have addressed that particular inadequacy quite efficiently. The company has said that almost 86% of the overall portfolio is now under long-term PPA contracts versus around 81% at the end of FY20. The company has also said that the long-term net generation has gone up almost 3% in Q4 and around 3% in FY21 as well. When you're talking about the net debt to equity, it has come down quite significantly, coming at 0.43 times. And when you're talking about the net debt, company has ensured balance sheet remains very, very healthy. Net debt has been reduced by over 500 crore in Q4 and over 2,700 crore in FY21. Net debt stands close to 6,200 crore currently. When you're talking about the growth plans, as we mentioned, most of the companies are on ambitious growth targets. JSW Energy has announced that they would be increasing and expanding their entire capacity from 4.6 gigawatts to almost 10 gigawatts by FY25 and increase it to 20 gigawatts by FY30. The company has said that the entire capacity addition is going to be done mainly via the renewable energy route. Citi has written as far as the results of JSW Energy are concerned. They have maintained the buy stance, kept the target at 178 rupees a share. They are saying that the growth is going to be done via the renewable space with healthy cash flows that the company has managed to generate. JSW also has done significant value-accretive acquisitions, and the company has refrained from participating in cutthroat bidding as far as renewable projects are concerned. This has left the balance sheet in very strong shape, and which is why JSW Energy, despite being quite wary as far as valuations are concerned, are still quite optimistic as far as the prospects of JSW Energy is concerned.